Something really interesting is happening with this company in the insurance business. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We go here to the economic signals, insurance. We can see that there's a decent move here from the low. Specifically, we will look at Marsh and McLennan. So 43-ish% here from the low and pretty close to the 52-week highs. The thing is that when I scan for these opportunities, I need to focus on very interesting signals. And as of late, there's been certainly a large number of more bearish signals, but that is just how the cookie sometimes crumbles. There will be other times where, especially after a pullback, there will be a large number of bullish opportunities. So this is the company's website, a huge company in the insurance industry. If we go here to the charts, weekly data points, so you can see that this stock is up. If we go way back here to when it went public, it's up 5,432-ish%. That is quite clearly a pretty big move. If we look at how it has reacted to prior business cycles, so you see that in this instance, leading up to the dot-com bubble, it did peak around the dot-com bubble. But you can see that it didn't really recover. You see that it continued here to deteriorate. It more or less shuffled sideways in this major range between 2004 and the top of the housing bubble. But ever since the global financial crisis, down here, this stock has had a very clear uptrend. Higher highs and higher lows. If we look at the most recent reaction between the current RSI overbought level and price, you see that there is a strong tendency for these levels to trigger a pullback. The exception is with this pink arrow where we saw that we were overbought for an extended period here in 2013. But that is the exception. There generally is this phenomenon where it is high RSI triggers a pullback. There's been a tendency to go back to the purple 20-week moving average. Also, the 50-week moving average in green, occasionally even the even longer term moving averages. If we look at where price is now, from this level here approximately, so it would be around -8-ish approximately pullback if we were to pull back to the purple 20-week moving average, and you can see the percentages this certainly increase if we are going to revisit an even more longer term moving average. If we go here to the daily data points, we currently here on the daily data points have some interesting prior observations regarding RSI and the PPO, which the PPO measures the distance between price and the red 200-day moving average. So currently we are at a very high level in regards to the PPO, and you see here, if we go back to this time, a high PPO, it did for the major pullback that we saw. In this instance here, you did see that when you had high PPO, we did see we saw mean reversion. In this instance as well, we went down here to revisit the blue 100-day moving average. In this instance, we did roll back here to the 200-day moving average in red. Looking here at these blue arrows, they show the RSI. We are at a very high RSI level, and you see that throughout all of these years, there's a very strong tendency for this stock to have a pullback on the RSI. In this instance, the price did actually go higher after we had high RSI. However, the PPO that we currently have is the PPO we had before the pullback. So now, currently, we have a combination of high PPO and high RSI. And in this instance, a high RSI, like now, it's triggered a pullback. In this instance, we did we did actually see a bit of a grind higher. So that is something we just have to be aware of. In this instance, you saw a clear pullback. So it's a bit mixed, but generally speaking, the current setup is has been more favorable towards the bears, in the sense that there's a higher probability that we will have a mean reversion and test one of the the support moving averages below us, while us roaring to a new high, just soaring towards the moon. It could happen, but it is a lower probability. But let's look at more data. When we look here at seasonality, we do see that April is the strongest month. May is meaningfully weaker. There usually is a gain in May, but it is weaker. But as far as seasonality go, we do not have anything really dramatic in the sense of very high number or very low numbers. Looking here at Finviz. So here we have the analyst price target. If we look at the most recent developments here, if you look at all of these, there's been a plethora of downgrades. So that is not bullish. Looking here at the target price, and when we compare it to the current price of the stock, they suggest a minus 6.3-ish downside. Yeah, that's more towards the bearish end of the spectrum. Looking at Saks.com, they do have a number to buy: D value score, B growth, and D momentum. The industry rank is in the bottom 14%, so industry is insurance, brokerage. Yeah. And here you can see, the specialty of McLennan: risk and insurance services, risk consulting, and employee benefits. There is a dividend, 1.46%. So, but I do have a bit of a criteria that I don't think the dividend is a sufficient reason to hold unless it is more than 3%, because then the dividend is so significant that compensate for inflation and possible price depreciation. Okay, so to sum up my take here on this stock, I think that looking long term, we did see some alarm signals that suggest that there is an increased probability that we will revisit one of the support levels. So basically one of the moving averages. The key candidate here would be this purple 20-week moving average. The pullback to that moving average would be in line with what we saw with the analyst price targets, and also Saks ratings, because they do have a bottom 14% ranking here for the insurance business, which suggests that quite a few of the companies have a stock price that is a bit excessive. Looking at the daily data points, there are some clear support levels to look at. The key to designing a market-neutral portfolio is to look for bullish opportunities, and also, of course, bearish opportunities. And that is what I am presenting here. Is that looking at Marsh, McLennan at this price point, there are more interesting bearish strategies than bullish. But we do have an overall uptrend for the stock. Hence, this is more, at least given the current picture, it is primarily a bearish strategy until we find support at one of the moving average support levels. And at that point, there could be some interesting bullish opportunities. But that is, of course, to be determined.